Hey everybody, welcome back to Coffee
Sometimes tea
with Jen and Marcelo. So we're continuing our
we're actually coming to almost an end.
Almost to an end.
Just a couple, this one, another one or two to go. So
in the series.
So thank you for sticking it out with us. We'll try to keep this one a little bit shorter for you if possible. So what this one is creative financing, and lots of stories around that. But what creative financing is, you can't necessarily go the traditional route to secure funding for purchasing. And I'm gonna use the home loan. Okay, you can't get a home through conventional loans. You might not be able to get the Fannie Mae or the Freddie Mac or whatever it is that's out there. But you have to get a little bit more creative. And here's a couple of things that we're going to recap. So I'm just going to quickly go through the list, and then we'll break it out. So you got seller financing, you got lease option, peer-to-peer lending. Some people have even done crowdfunding to raise money to get their dream home, or because they're running short or life happen, and maybe they're selling t-shirts to raise their money. Hard money loans. Okay, that one I would put as like the very last on the list. If you had to go that route, I would say stay away from hard money if at all possible.
Government programs,
microloans, and invoice financing. So we're going to go over these very quickly. We are quite familiar with a few of these, if not most of them. So seller financing, what is that?
That's where I'm going to read the definition for you here. So the seller acts as the lender, allowing the buyer to make payments over time. So I'm going to buy a house and I can't afford all of it. So what I ask is, hey, can I pay the seller the money until can you hold it for me? Can you finance it for me until I can afford it?
So the example is, okay, I'm going to buy your home. I can't get financing.
Correct.
I can show you that I have good credit, or maybe not so good credit, but I can show you that I can make my payments. I can show you that I have a job, and I've had the job for 5 years. I ran into a little bit of a pickle. So, Mr. Seller, can I buy your house? You say yes.
I'm going to pause for 1 second. Being weird.
All right. So
sorry about that. The cat's head got stuck inside the mug there. So.
Apparently, he really wanted what was at the bottom of that mug. So sorry about that. Had to go rescue the cat. All right, and he's fine, by the way.
Yeah, he's fine.
Okay, but so we were at the example of buying home seller financing. So this is just the first one in the examples of creative financing. So again, where we left off,
buying a house, can't afford it because I've got great credit. I've got a great job, that kind of stuff.
So you're saying you're the seller, and you're saying, okay, I agree. But here's the fun point. If you're the seller and I can't make my payment, and for whatever reason I have to give back the keys, he gets to do it again. Yeah. And now he has deposit he got to keep. He had monthly payments. He didn't have to do any maintenance. He didn't have to take care of any problems on the home. That's my responsibility as I bought it. But if I have to hand back the keys and he's like, yeah, I like this, maybe he does it again. So something to think about for those investors out there that are thinking about maybe selling a property. Okay, lease option. This is where they lease the property with the option to buy. Now, this is different than the seller.
It's more of a rent to own.
This is more like this is definitely more like a rent to own. And in that lease, that's where the homeowner may still be responsible because they're renting a house with an option to buy within a period of time. So this seller option is saying, okay, I'm going to give you this house at this price in preset in the future, and I'm going to give you 3 years to go get yourself all put together and go get yourself a loan and buy me out completely. Or say 3 years or 5 years, or whatever it may be, depending on who you're purchasing it from. This is great for individuals who need, again, time to build that credit. Put that money aside, put it in one of those buckets, call it a home, while locking in your price for that home, which is good for you. And it's a win-win situation. All right, peer-to-peer lending.
This right here we haven't really.
You don't know a lot about this, but I am a little bit familiar about it. It's when you're borrowing from other individuals.
Oh yeah, like a loan from somebody.
It's like the lending club.
Yeah.
Where you go in, or the P2P lending, right? And you go in, and they still have their own criteria. You know, how does it work? It can be flexible. There could be more offers. The rates might be better than traditional banks, especially with those with less than perfect credit. However, they do have requirements. And I was when we were looking at refinancing the house, I looked at this as an option because we were in one of those situations where like, okay, well, could this be good for us? And thankfully we didn't have to go down that route. I do like the lender that we are with now. Really good. They're really good. Yeah. Great customer service.
Crowdfunding.
Crowdfunding.
I never knew this more for mortgage. I knew this more for like projects and stuff. Yeah,
and raising money for a project. But there are categories like Kickstarter, GoFundMe.
But be careful with GoFundMe. Look into it very, very deeply.
Look at the terms and services. That's all we're going to say about that. If you want to learn more about that, if you're not already in our school,
join us in our school.
Join us in our school. Join us for a live session. Ask us about this. We'll bring in some people who can also kind of tell you a little bit more as to the pros and the cons to this. And I'm sure you could do some Google searching on this, as well as ChatGPT, to get a little bit more details as to the pros and the cons, which one to go down. Now, say for instance, it's not just for startups or businesses. It can be a way to gather your funds for large personal projects or expenses, like purchasing your home. Something else people can do, and this could be a side hustle as well in crowdfunding. Maybe you design something, sell your designs on t-shirts. I know that's like maybe an Etsy store or something, but if you're trying to be really specific, you got to give them a compelling story. You got to tell them why. So crowdfunding is a little bit more, it's definitely on the high end of creative. But again, you want to make sure you're doing the format, follow the formats, know the terms, know what happens if you don't hit your goal.
They should have made this one the last.
It's ChatGPT, so
hard money is not.
We're going to
skip it for.
We're going to take hard money and put it the last. We're going to go straight to government programs.
This is something really cool. Grants. We learned about this, and listen up, guys. We're not talking about race or any of that stuff, but guess what? Take advantage of it. Hispanics, take advantage that you guys speak Spanish. That's why a lot of our companies are owned by Jen, because she's a female. Okay, there's grants out there that give females for their own company money. And if you guys understand what a grant is, you don't have to pay that back. Some of those grants are free money.
So, and there are criteria. There's a list.
There's a list. Yeah,
we have a list.
Yeah,
and it doesn't matter if you're
for
all female,
all races.
It's not
handicaps. Everything.
If you're disabled. I checked 2 boxes, by the way. I am deaf. You would not know, but I am deaf in one ear. And
she's female.
Yeah, they made me do a stupid hearing test at my last place that I worked at because they didn't believe me. And I'm actually deaf in one ear. And then being a female, 100% owned company. Yeah. So I could go after the grants. It could be in my favor for an SBA loan. So look, I mean, depending, are you a vet? Or, what are your circumstances?
There's so many.
They have those little boxes for a reason. It's not just about race. There's a whole bunch of other things that are included in this. And we have a list. We'll be more than happy to share that with you. So
we'll post it in our group chat for you guys.
If you are part of our school community, we'll be more than happy to share there. And if you're not, well, guess what? You're going to have to join to get it because I'm not putting it here.
No, it's free.
And our community is free. So if you want to learn more, join us. if you're not already watching it from our school platform.
Microloans.
All right, microloans. These are the small short-term startups. This is that quick turn it and get it back. This is like, hey,
well, just like this. So
for example, hey, I need $5,000 to purchase some inventory. We'll use the Amazon. We'll use Amazon. Okay.
No.
I have an FBA store. I want to go get some inventory. I just spent a bunch of money to get started, but I forgot about the inventory, and I went and did some wholesaling, and I need an extra $5,000 to lock it in.
Can I borrow some?
Can I borrow some money? This is where I'm at. This is when I think I can get it back to you in like 90 days. Right. Are you okay with that? I put a little interest on it.
And you're done.
Sure. Done. Move on.
That's
now,
your microloan.
That's a microloan. They're out there. You could maybe borrow from a friend, but if you do, pay them back with interest. It's the least you could do if they helped you out. There are short terms out there. You just have to do some Google searching on it.
Invoice financing, you got to be really careful with this one, guys.
Yeah,
I don't suggest this one. So.
This one and the hard money, I take these and put them at the very bottom.
So what we'll do with those two guys is come join us in our school, and we'll go a little bit deeper into these. But those are two that you really have to be very cautious on.
So what is invoice financing?
We can tell you what it is. Yeah,
a way for business to borrow money against the amount due from customers. A company sells its outstanding invoices to a financier at a discount in exchange for that cash. This can provide quick cash flow for business waiting on payments that can be expensive in terms of fees and interest, but it can be even more expensive if they don't pay you.
Correct. What happens if they don't pay you?
What if they don't pay?
Then what?
Then what do? You still have to pay. Like you still got to pay. Like they're saying outstanding invoices. Okay, so who's going to be responsible at the end of the day? It's going to be
your
you.
Ass.
All right, so the very last on the list is hard money. These are short-term loans secured by assets, real estate.
So say it.
Usually
so
offered
say
by
that again slowly so people understand.
This you are putting
up
your asset.
So what happens if I don't pay you?
You lose your asset. So if you're in a building, you own the building, you got a loan, you did whatever you need to do, you got some equity in there. Now you're going to a hard money lender and say, I've got X amount of equity in this property, in this asset, in this machinery, in my fleet of cars or trucks or whatever it may be, because they do have hard money for that as well.
That's where they have hard money for mostly.
And
because they can come and take your vehicles.
They can come and you don't
building
pay.
Gone.
You better have a really good place to hide it, or it's going to be gone. You just got to be careful here. Have your plan of action in place before you pull these triggers. This is a prime example for a fixer-upper planning to renovate and sell quick flips. You know, the flippers. You see them on TV. It looks really great and glamorous. They do all this. They're doing the dirty work. And then they talk about, and you got the people, oh my gosh, I'm going to lose my shirt because blah, blah, blah. So many delays, so many problems. But guess what? That's TV. And they do these things, but let's look at everybody else in the world that do flips, that run into this, used hard money. They were out of their time, which then that interest rate may be through the roof daily, depending on your terms that you agreed to.
Well, they can raise it. It's a hard money to do what they want with it.
Well, if you're smart, you would have read the tiny fine print.
Some of them don't. Some of them increase the rate as the day goes.
You have to know the terms. Anyways, again, a whole nother conversation.
That's what I'm saying.
The point is, this would be the last thing on the list. For real estate, I can see this. I can see that.
For a quick fix.
Or flip. But if you do not plan this strategy using this, it could really cost you, including the property. So I'd say hard money and invoice financing. Those are my last two on the list. If you have to go there, really weigh the risk. And I consider those really high risk. So I like the seller financing. I like lease options.
Yep.
And I even like the crowdfunding because you can get creative.
Hey, peer-to-peer,
creative.
peer-to-peer is okay. It's a family. You could borrow money from family and stuff like that.
But
I mean,
you should pay them back.
yeah,
it's not right.
That peer-to-peer to me is almost the same thing.
And if you are maybe on the other side, maybe I'm not yelling. I'm just excited. I'm excited. Oh my goodness! Sorry. They gotta wake you up. You've been watching all these videos. They gotta wake you up. Wake up. So peer-to-peer. If on the flip side you're the one lending, as much as you might not want to, I would say get that stuff in writing.
Yeah.
Get it notarized. Cover yourself. There is a flip side to this, people. If you're going to borrow from a family member, pay them back, but do it the right way. Put it in writing. Get your promise in writing. It's the right thing to do. All right. So each one of these is a different, unique, and creative way and a solution. I do have a whole nother list of creative ways that you can. I mean, there's a book, and I'm going to list it in the link below. That you can read. It's all about creative financing. I think it's pretty amazing. Yep. And we'll put it out there for you. And you don't, and you can't just read it from A to Z. There's methods of you can use this one and then this one, and then they kind of bring them together. And then that's a whole nother class. Definitely a whole nother class. And I'll have to bring in the expert on that one because that's definitely a session you would want to join if that's the route you want to go for creative financing, and this one would be more specific to real estate. All right, well, thank you again. We're almost done, and thank you for following along in this journey of these modules with us. Yeah. So, cheers to you. Thank you for joining. We hope to see you again here soon on
Coffee.
Sometimes Tea.
Thanks, guys.